Hey guys, Michelle Kinney here, checking in live from beautiful Bali, Indonesia. A couple people asked me yesterday about making a video for small accounts. So sometimes people mistakenly believe that you need a lot of money to trade stock options, but that's just not the case. I'm going to show you in this video how. Now, typically, my favorite strategy is to sell puts. That's because of two things. Number one, you keep your money in cash, so you create income just off the cash that you have. And number two, if and when you get assigned the shares of that contract, of that stock that you're selling a put on, you can also then afterwards sell a covered call against it. And then you make money 2 times. So in this video, I'm going to talk about selling a put. Now, if you're thinking, man, that sounds confusing, I'm not able to follow you, it's super easy. I'm going to break it down 1, 2, 3 for you. Pay attention. So selling a put, all that means is that you're committing to buy a certain stock, 100 shares of that stock, at a certain price if it goes below that price. If it doesn't go below that price, you don't buy the stock. But either way, you keep the premium. Now, in this video, I'm going to show you an example on Mara, M-A-R-A. Mara is a Bitcoin type stock. And Bitcoin is really cool because it's got a lot of volatility, first of all. And the more volatility something has, the more premium you get paid. So that's kind of cool. And secondly, I don't know about you, but I'm a big believer in cryptocurrency. So Bitcoin is great, but the problem with Bitcoin is when you buy Bitcoin, and even if the price skyrockets, you can't actually spend any of that money unless you sell your Bitcoin. But if you trade options on Bitcoin type stocks, you can capitalize that and create yourself cash ongoing. So right now the market's closed. Right now it's 12:25 p.m. in Bali, which means it's 12:25 a.m. in New York, right? But Mara last closed at $16.37. So it's a very low price stock. What does that mean for you? That means that you don't need a lot of money to trade it. In fact, if you don't even want to use margin, if you only want to use cash and be super conservative, you can put this trade in with less than $2,000 in your investment account. So I'm looking at my platform, and I'm looking at where Mara options last closed yesterday when the market was open. So as I said, Mara closed the price at $16.37. Now here's a great trade idea for you. You can sell a $16 put. It closed at 33 cents. What that means is that you're committing to buy 100 shares of Mara if it drops from where it is now, $16.37, to $16 or lower before Friday. Now today is Wednesday, or it's going to be Wednesday when the market opens in New York. That means you get $33 dropped into your bank account right when you make the trade. Now, you might be thinking a couple things. First of all, $33, that's not a lot of money. However, I encourage people to focus on the rate of return, specifically the annualized rate of return. So for this trade, if you don't want to use margin, you only need $1,600 US dollars in your account. You put the trade in, you sell a Mara $16 put expiring this Friday. Today's only Wednesday. You get $33 in your account. Assuming that that contract expires worthless, you are making an annualized rate of return of 260%. Now, if you're not sure how I got those figures, reach out, put a comment on the online here, or reach out to me via a direct message, and I'll be happy to share the spreadsheet with you. So now there's a couple of other things that I look at when I sell a put. Number one, I look at delta. Now that might sound confusing, but again, I'm going to break it down super easy for you. Delta is the statistical likelihood that a stock is going to go from where it's trading to another price before expiration date. So for this particular example, a $16 Mara put that expires on Friday, it has a 41 delta. That means it has a 41% likelihood that it's going to end below $16 on Friday. Now, that doesn't mean that it can't end up below, so you want to keep that in mind. When you enter a trade and you sell a put, you have to be emotionally available to purchase those shares of stock at that particular strike price. So that's an important point to mention. Also, you also want to keep in mind, I'm only holding this trade for a couple of days, so my risk time frame is a very short window of time. And this is super important. People don't realize that you can exit the trade at any time. So let me give you an example on what I mean by that. If I was to enter this trade, as Mara fluctuates, typically as the price goes up, the price of my option will diminish in value. And what that means is I originally sold the put at $33. If the price keeps going up, maybe the contract might be worth, $20, $15, $10. So typically what I do, oftentimes, as the price diminishes, I buy back that contract and I take the risk off the table. What does that mean? That just means that instead of making $33, I make $23 perhaps, or $25 or something like that. But the advantage is that I take the risk off the table and I lock in my gain. So here's the thing, guys. This is super important. Pay attention to this. When you sell options, you're creating cash flow for yourself with the purpose of sustaining an amazing lifestyle. And you want to do that via small incremental returns, right? So we're not like going to play baseball and looking to hit a home run. What I'm looking for is singles. And I want to make incremental returns to sustain my lifestyle. And while I'm doing that, I want to lower my risk as much as possible. So anyway, I hope that's super helpful. Drop a comment below. Tell me, are you trading puts? Does that make sense? Do you have questions? Be sure to subscribe to this channel for great ideas as we go along. Also, check me out on Discord. I have the link below. And oftentimes I have a bunch of free content online. And then I also have some paid content. I'm running a Weekend Live Bootcamp. Oftentimes people have told me, maybe they're not the type of person that learns how to trade options from watching a video. They need some more one-on-one help. It's kind of like, using a personal trainer, right? So for a long time, I had been using a personal trainer. Why? I mean, anybody knows like what kind of exercises to do. You go downstairs, you walk on the treadmill, you do some sit-ups, you use some weights or whatever. But a personal trainer helps you and holds you accountable. So that's the value of working with somebody one-on-one or small groups. I don't really do any one-on-one work with anybody other than some friends that I run into from time to time. However, I am running a small group weekend bootcamp where I'm going to teach people A to Z exactly how to use this strategy and others like it. So here's the other strategy that I want to give you a preview for. This video talked about selling a put. If and when, let's say Mara goes below $16 and then I have to buy the 100 shares, I'm okay with that, especially because it's a small dollar amount. I mean, this video is particularly geared toward people with small accounts. Let's say if you start an account with $2,000 as an example, you're putting up, even without using margin, $1,600 in this example because I'm selling a $16 cash secured put. If I was to have to buy that stock, that's okay, because what am I going to do after that? I'm going to sell a covered call against it, and I'm going to make money on the other side. It's amazing. I'm telling you, trading options the way I do it, selling puts and selling covered calls allows me and can allow you to live an amazing lifestyle. Anyway, hope that helps. Cheers for now.